Good morning, everyone. Welcome to our next and last session on Ind AS 33, that is earnings per share. So in the previous class, we discussed diluted EPS and we saw how the calculations are done. We had concluded with options and warrants and the free element in options. So I had requested you to leave about half a page for theory on warrants. So please note down what I'm just giving you right now. So basically, what are options and warrants and how did we do the working? Well, these are instruments which can be exercised by the holder of the options. Typically, they will be exercised when the exercise price is lower than the market price. Okay, so this gives rise to an inherent free element in the option. So basically, my potential shares is not the total options. My potential equity shares is essentially the difference between the consideration received and what is the fair value of shares that would have been issued. The differential would be the bonus element that is present in the options. So that is what we are just going to put in writing. Otherwise, we had done the questions. We have seen the impact of all these adjustments. Okay. So good morning, Shailendra. Yes. So please take note of this. What are options or warrants? These instruments. They represent right to subscribe to shares of the company. However, unlike convertible debentures, preference shares where no consideration would be, unlike convertible debentures or preference shares where no consideration would be received, no consideration would be received on conversion. See, in the case of preference shares or debentures which are to be converted to equity, you will not receive the consideration on conversion. Why? Because the consideration would be received when they were issued in the first place. So now we are not getting the conversion. We are not getting any consideration. That is why the entire number is taken in my potential shares. If you remember, convertible debentures and preference shares, entire number of shares is considered as potential because on conversion no consideration is received, but in this case we are receiving a consideration. So unlike convertible debentures or preference shares where no consideration would be received on conversion, in the case of exercise of option or warrants, cash consideration would be received. मतलब अभी अपने को पैसा मिलेगा जब वो एक्सरसाइज करेगा. Typically, such consideration would be lower than the fair value or market price of the underlying shares. That we also have seen that. Okay, what will be the price received will be lower than the fair value, and that is why it gives rise to a bonus element. In respect of consideration received, the equivalent shares at fair value would be ignored. It cannot be regarded as potential since consideration is received. हम potential share किसको मानेंगे? Future में there should not be anything which is not in control of the company. Receiving shares at fair value, is this in control of the company? No, it's not. अगर आप shares at fair value, if you start considering it to be potential, how will you calculate diluted EPS? Future में आप कभी भी shares issue कर सकते हो at fair value. Every future issue is going to be an element in that case for the purposes of calculation of diluted EPS. So the fair value of the shares will be ignored because consideration is going to be received in the future, and that is why we will not consider the fair value equivalent shares in our options calculation. We will be considering only the free element. In respect of consideration received, the equivalent shares at fair value would be ignored, and adjustment would be made only for potential equity shares which may be issued without consideration. We are adding only these shares in the fair value, sorry, in the diluted EPS calculation. So we call these as the free element. Are you recollecting? Yes. Good morning, Sumit. Good morning, Hari. Good morning, Manini. Yes. All right. Are you guys able to recollect? Yes. So what you are getting, the fair value equivalent of that is ultimately going to be ignored. Okay. So how did we calculate free element? Free element in options is equal to shares issued on exercise of options minus number of shares, number of options into exercise price. This is the total consideration received. We convert this to equivalent shares at fair value, or what we call as average market price. Generally, no interest or dividend is paid on options, and hence no adjustment would be made in the numerator. We have seen that also. Yes, nothing is added to the numerator. However, in one case, we did the last question, jisme there was a variable ratio and they had a fair value movement, 2,650 and some other value. So those movements alone will come in the numerator. They will be added back. Okay, they will be added back. I think Kaushiki had asked the question, what is the meaning of that? So we had just briefly touched upon. I cannot discuss it because it pertains to a different standard. But yeah, so that adjustment would have gone in your profit after tax workings. So that will be added back. Apart from that, there won't be any other additions. Okay. Good morning, Nidhi. Good morning. Okay. So you can just note that also down. However, if options were measured using FVTPL principles, comma, fair value gain or loss would be adjusted in the numerator. For your information, we had already done this adjustment. You can check. To arrive at net profit attributable to equity shareholders, we have given the impact of fair value adjustments. So हमने इसको already adjust कर दिया है. No, this is for basic, sorry. Diluted के case में you can have a look. Not this one. Diluted के case में you can have a look. It is adjusted. It is adjusted. Here it is deducted because this is based on the past, but for potential, we add back 2,500. Okay, so we are adjusting that. All right. So is adjusted in the numerator. Okay, so I hope that this part is clear. No doubts. Okay. Have you guys noted where multiple conversion ratios are listed, comma, select the ratio that maximizes the dilution. That maximizes the dilution. That is least EPS. Least EPS. This would be the ratio involving issue of maximum number of shares. We had done that. We took 135 shares and did the workings. So this takes care of your theory on options. Are, have you understood? Did you understand? Yes. Any doubts? Have you guys noted down? Anybody's left out? Anything pending? Yes. Noted down? Sailendra, Hari, Sumit, all done? Yes. Okay, fine. So that takes care of options. We now look at a very small topic. Okay, this you can note it after you had done this question. Come back to this part where you have done this question. Okay. After that, you can give the heading written put options. Small subtopic it is. Likelihood in exam also is very less, but because it is there in the study module, we'll just discuss that. Written put options. Okay, written put options. क्या होता है ये? Options, options, options. See, the first one was a call option that is given to the holder of options. The first case, whatever we did just now, employee stock options or just any general options or warrants which is given, these are options which are given to the holder, which are there with the holder, and for those options we are going to calculate the free element in that. Now written put options is also something similar, except that in the case of written put options, what happens is company is option writer. Company is option writer. What do you mean by option? Yeah, Shailendra, what do you understand by free element in options? Yahi to hai, we have done this free element in options. Okay, I don't know what you happen to mean. Okay, free element in options. If you look at our workings, see, we had done this question. Free element in options 2,62,500, 354, 375 in the question. Okay, so this is what we had done. So I don't know what you are meaning by free element. Okay, all right. So what do we mean by written put options? Company here is an option writer. That means let us assume that you are having a company which writes an option to an entity A, which writes an option to an entity A. This entity A, so let us assume that 160 put options are given. 160 put options are given. Who is writing the option? Company. Who is holding the options? Entity A. What do you mean by writing the options? What do you mean by holding the options? You will study it in your financial management, but nonetheless, when I say option holder, entity A would have paid some small premium and he will get the options for, he will get 160 put options. 160 put options means what? On the particular date, entity A will look at the exercise price of these options. He will look at the market value of these options. He will look at the exercise price. He will look at the market value. And if he feels he is going to make a profit, he will put those options in front of the option writer. And the option writer is obligated to accept these options because that is how options work. Okay. So let us assume that company has written 160 put options in favor of Mr. A with an exercise price of rupees 8, with an exercise price of 1 second, not rupees 8, rupees 10, with an exercise price of rupees 10. Currently the market price is rupees 8. Market price of the share rupees 8 per share. Market price of this thing is rupees 8 per share. Tell me, is entity A in a profitable position? Is entity A in a profitable position right now, or is he going to be in a profitable position when the market price rises? What do you think? It's plain common sense. Right now, do you think entity A is in a profitable position, or do you think that he is not in a profitable position? He is in a profitable position. See, market price is 8. अगर उसके पास शेयर होता और वो मार्केट में बेचता, उसको सिर्फ 8 रुपया मिलता. But today he is having a guaranteed contract from the company itself that he will get a value of 10 rupees. He will get a value of 10 rupees. So is he in a profitable position? Yes, right now he is profitable. So what is going to happen is entity A probably will exercise this option. See, we are talking about diluted EPS. Okay, so diluted EPS means these are all abstract things. ये अभी तक हुए नहीं है. This is not happened now. We are going to estimate. This is the market price of the share right now, 8 rupees per share. But today, if entity A exercises these options, entity A will be getting 10 rupees. Who is going to give? Who is going to give? Well, company is going to give 10 rupees. So can I say, now please pay attention. Now please pay attention. Can I say if company is going to pay the money to entity A, if company is going to pay the money to entity A, can I say that it is nothing but company will buy back the shares? Can I say this is somewhat similar to that? Can I say that this is somewhat similar to that? See, company has to honor the contract because company is the option writer. Entity A will come to the company and tell, Dekho, I have a put option which is written by you. Exercise price is rupees 10. I want to exercise the option. The company has to pay entity A 10 rupees. The company has to pay entity A 10 rupees. So here the payment is happening, not issue of shares, payment is happening. So in other words, can I say that this is somewhat similar to a buyback of shares? Buyback में क्या होता है? आप shares खरीदते हो ना, from the market you buy the shares from the existing shareholders. Here also you are buying the options back. So this is like a buyback of potential shares. Now, how am I going to treat this? Just pay attention. It's very simple. Assumptions. Okay, this is the story. Okay, you have to understand with the help of the story. The story goes something like this. See, there are 160 options, 10 rupees per option. So the company has to pay 1,600 to entity A. This is going to give rise to a cash outflow. ये cash outflow के लिए What am I going to assume? Well, I am going to assume that to raise 1,600, I am going to make a fresh issue of shares. So rupees 1,600, fresh issue can happen at market price. So I am going to make a fresh issue of 200 shares. I am going to make a fresh issue of 200 shares. I'll give you the presentation later, but right now just pay attention. So to raise 1,600, I am going to make a fresh issue of 200 shares. ठीक है बेटा, 200 शेयर आपने इश्यू कर दिए. उन पैसे का क्या किया? सर, उस पैसे से मैंने 160 ऑप्शंस बाय बैक किए. आई बॉट बैक 160 ऑप्शंस. दैट मींस आई बॉट बैक 160 potential shares. I bought back 160 potential shares. So you will still be having 40 shares left with you, which you had assumed you would be making a fresh issue to raise the funds for buying back those options, for honoring the options. So these 40 shares represent my free element. These 40 shares represent my free element. Are, have you understood this? Yes. Did this actually get exercised? No. Am I actually issuing this 200? That also is no. Will I actually be left with 40? It depends on what is the market price. But ultimately, the thought process goes something like this. To raise 1,600, how many shares am I going to issue versus how many options am I getting back? The differential represents the additional shares you would have issued without a consideration, and that becomes your potential shares. That becomes your potential shares. Is it okay? So that takes care of the understanding. So it's a very small topic in your study material also. Let me just show it to you. I've taken as far as possible the same example for you. Okay. Just a minute. 65, 66, 66. Yes. So written put options. Contracts that require the entity to repurchase its own shares. I explained to you, it is nothing but a buyback. It is nothing but a buyback. These are reflected in the calculation of diluted earnings per share. I showed that also. If these contracts are in the money during the period, you know the terms in the money and out of the money. From whose perspective? From the perspective of the option holder. See, for the option holder, 10 रुपए का exercise price, 8 rupees market price. Arey, it is in the money. Per share, he is going to get 2 rupees extra if he had sold in the market than what he is getting on giving the options, exercising the options and going to the company. So this is an in the money option, an in the money option. So if it is in the money, then there are potential dilutive effect on EPS. How will we do? It shall be assumed that at the beginning of the period, sufficient ordinary shares will be issued. Sufficient ordinary shares will be issued at the average market price, the 200 shares which we worked out. Okay. So it shall be assumed that at the beginning, 200 shares will be issued. It shall be assumed, then we next assumption is proceeds from the issue are used to satisfy the contract. So 200 share issue kiye, 160 options I bought back. The incremental ordinary shares, which was 40 in our example, shall be included in the calculation of diluted earnings per share. And this example is exactly the same what we have just now discussed. Have you guys understood? Kaushiki, Manini, Nidhi, Shailendra, did you guys understand? Yes. Hari, Sumit, Aniket Jain, Srishti, are you there? Yes. Did you understand? All clear? Yes. So for this written put options, you can just write refer study mat. Nothing else is there. There is no question on this as such. It's just a concept that is there. I did it along with options, because option mein hi this also gets covered. In the options also this starts to get covered. Okay, so yeah, so this takes care of written put options. Then we move on. We are left with two topics, two broad topics, okay, and one or two small topics. Okay, the first broad topic that we are having is financial instruments in earnings per share calculation, financial instruments. And the second one is contingent shares. The second one is contingent shares. Then we are having topics related to participating preference shares as well as presentation of EPS with the help of continuing, discontinuing, and discontinued operations and total operations. Okay, so these are the 2-3 things which are left. Okay, so let us come back to our, we'll first cover up the financial instruments part, and once we cover the financial instruments, we'll take up a small topic, then we move to contingently issuable shares, and that should kind of, you know, conclude our discussions. Okay, so coming, I don't need this, I need my notes. Okay, slide number 66. Okay, all right, so now let us view this. Okay, this is an RTP question. This is put in your RTP, it's there in your study mat, and this illustration is picked up from the MCA portals Ind AS 33. So we are having Ind AS which is hosted on the ICI portal, also on the MCA portal also. ICI portal is basically having the standard text, whereas Ind AS, whereas the portal MCA has the standard text given by ICI, plus it has a little bit of some illustrations here and there, etc. So this example was picked up from there. Okay, an entity issues 2000 convertible bonds at the beginning of year 1. The bonds have a 3-year term and are issued at par with a face value of rupees 1000 per bond, giving total proceeds of rupees 20 lakhs. These are all languages that are there in financial instruments chapter. Interest is payable annually in arrears at a nominal annual interest rate of 6%. Each bond is convertible at any time up to maturity into 250 ordinary shares. The entity has an option to settle the principal amount in ordinary shares or in cash. The entity has the option. The entity has the option. When the bonds are issued, prevailing market interest rate for similar debt without a conversion option is 9%. At the issue date, market price of one ordinary share is rupees 3. Income tax is ignored. Profit attributable to ordinary equity holders of the parent for year 1 is 10 lakhs. Ordinary shares outstanding is 12 lakhs. Convertible bonds outstanding is 2000. So this is the question. Sir, how do we know when to put financial instruments concept? That is when you are having this data. 9% prevailing market interest rate. You need this data for convertibles. When you have this data for convertibles, then you can do split accounting, identify the equity component and the liability component, and then the equity and the liability component will be amortized based on the effective interest rate, based on the effective interest rate. Okay, so let us start doing this question. This is illustration 14. We'll first do it what is given in the study mat, which is not wrong, but there is an alternative also. So I'll explain the alternative to you, and in exam you can always write that the alternative exists. Okay, so what they have asked is calculate basic and diluted EPS. Basic is simple. 10 lakhs is your profit attributable and 12 lakhs is your ordinary shares outstanding. Basic EPS is 10 lakhs divided by 12 lakh shares. So that comes to how much? Rupees 0.833 per share. That comes to 0.833 per share. Okay. Next one is diluted EPS. Diluted EPS. How do I calculate the diluted EPS? Sir, you will adjust for the impact of dilution, that is the potential equity shares. What are you going to adjust? Well, you have to add back the finance cost. You have to add back the finance cost. Sir, क्या बात कर रहे हो? Simple तो है. 20 लाख का proceeds है, 6% interest है, 20 lakhs into 6% किया, so we get 1,20,000. We'll add back 1,20,000. Answer is no, you cannot, because here I am given the sufficient data for doing a split accounting. So we are going to follow split accounting. Okay. So calculation of liability component. Calculation of liability component. Okay. So how do I calculate this? Well, my annual outflow is 2000 into 1000, that is 20 lakhs, multiplied by what is the coupon rate? The coupon rate of interest is what you pay annually, that is 6%. So rupees 20 lakhs into 6%. This is the annual outflow that you are going to do, multiplied by, you are going to do this for every year, and you are going to do this for how many years? What is the maturity period? It has a 3-year term. It has a 3-year term. So therefore, 3-year term, the actual market rate is 9%, which is going to be my discount rate, and the cash flow is going to be at 20 lakhs multiplied by 6%. 20 lakhs multiplied by 6%. So how am I going to do that? Well, since it is 1,20,000, 1,20,000, 1,20,000 each year, 20 lakhs into 6%. So what I will be doing is, we can use present value annuity factor 9% for 3 years. 9% for 3 years. So that comes to 2.5312. That comes to 2.5312. This is the stream of cash flows which you are going to pay every year. The stream of cash flows which you are going to pay every year. Plus, at the end, you are going to pay the liability. You are going to pay off the liability. So plus rupees 20 lakhs into, can I use present value annuity factor here? No, this is a one-time bullet payment. This is a one-time bullet payment. So you are going to give the discount factor, not annuity factor. Present value factor 9% third year. 9% third year. So that comes to how much? Can somebody help me out? Can somebody help me out? 0.7721. 0.7721. Okay, all right. So this gives you how much? Rupees into 0.06. This comes to 3,03,744 plus rupees 1544,200. $1,847,944. 1847, 944. Since these represent obligations, if you have taken 3 decimals, you get 1848 something something. If you have taken 4 decimals, you get this answer. Okay, so I leave it up to you. 2 या 3 कुछ भी हो, the difference is not material. Okay, तो वो चलता है. But it all depends on how many decimals you have considered. Okay, 1847, 944. Therefore, equity component is equal to, by issue proceeds is 20 lakhs minus 1847 944. So 20 minus 1847, 152, 056. Sir, where this 1,52,000 is going to go? This will be recorded under other equity, not relevant for EPS. 1,52,000 से कुछ नहीं होगा. It is irrelevant for EPS. It's just an item that has to be disclosed under other equity. Other equity. Okay. Other equity. Okay. Done. Everybody clear? Yes. Manini is also right. It is assumed that the entity will settle the liability in cash, and hence treated as such. Treated as such. Alternatively, in case it is it can be assumed to be in nature of equity. It can be assumed to be in nature of equity, not included in above workings. Not included in above workings. Okay. See, Manini, understand this. I have a financial instrument of 20 lakhs. This 20 lakhs I have to pay as 2 cash flows. One is in the form of interest, the other is in the form of principal. Now, 2 things can be happening in this case. First one is interest will be settled in cash. This is a liability. This is treated in this manner. Okay, this is the calculation. I hope that this interest part is understood. Okay, now coming to the liability part, coming to the principal part. Look at the question. Look at the question. This is at the option of the entity. Entity means what? The company which has issued this instrument, not at the option of the holder. So the principal amount, how it will be settled? Will it be settled through cash or will it be settled through equity? When can this be? Who can decide this? Who has the right to decide this? Sir, it is the company which has the right to decide it. So the company can obviously know whether it is cash or whether it is equity. So my submission is that solving it from the perspective of cash only is going to be not a very complete answer, because the entity also has the option to take it as an equity, I will first do it from the perspective of cash. We will look at the workings. Then I will explain how the solution will change in the case of settlement happening in equity. That time the story is going to be clear. Okay. So now if this is principal settled in cash, then what happens is I will be repaying 20 lakhs at the end of the third year, and therefore the value of the liability component is going to be 18,47,944. That means the equity component which is included is calculated as a balancing figure. Why balancing figure? This is as per Ind AS 109. Jab aap financial instruments padhoge, that time you will be following. So this 1,52,000 is not equity shares. It is just other equity. It is just going to sit under other equity in the balance sheet. So therefore, this element is not relevant for earnings per share calculation. Ye profit and loss mein nahi jayega. This won't go in your P&L. This goes and sits under other equity. Okay. So it is assumed that the entity will settle the liability in cash and hence treated as such. Treated as such means we have done this treatment. Alternatively, it can be assumed to be in nature of equity. One second. Okay, alternatively, in case it can be assumed to be in nature of equity, not included. One second. It would not be included in above workings. I will explain this the moment I first complete the liability portion. Okay, just give me about 5 to 10 minutes to get this concept clear. Then we move on to what will be the impact if we treat it as equity. Is it okay, Manini? Till now, have you understood? Yes. Is it clear till now? Others, Saksham, and then who are the others? Till now, is it clear? Liability component ka, is it clear so far? Yes. All clear. Okay. So the equity part, I'll come to that. Give me some time. Okay. Just give me some time. Okay. So this is how it happens. Now, effective interest. See, my liability portion is 18,47,944. This is in respect of the convertible debenture that is lying in my balance sheet. So finance cost or interest can only be on the liability component. It cannot be on the equity component. So this is gone outside. It's gone to other equity. It will sit there. This 18,47,944, I will be multiplying with which rate? Sir, मेरे पास two rates है. I am having 6%. I am having 9%. Which rate am I going to consider? Sir, you are going to consider 9%. Because that is the rate which you have used for the discounting. Why did I use that rate? Because that is the fair market rate of such a non-convertible debenture which is going to be redeemed. So my instrument has features of Equity also has features of a liability also. So I will do the split initially, and then the liability portion I will do a pure liability accounting. I will do a pure liability accounting. The 6% kya? 6% is calculated on the face value of 20 lakhs into 6%. 1,20,000 each year is just a payout. It is just a payout. This 1,20,000 will never hit your profit and loss in the first place. This 1,20,000 is not going to hit your profit and loss. What is going to hit your statement of P&L is 18,47,944 into 9%. This is your effective interest rate. This is your effective interest rate. And this comes to how much? 18,47,944 into 9%. So this comes to 1,66,315. 1,66,315. This is the interest on this instrument for the first year. This is the interest on the instrument for the first year. Therefore, diluted EPS is equal to, what is my present basic? We start with basic, 10 lakhs divided by 12 lakhs. Divided by 12 lakh shares. This is the starting point. Plus, we will add back how much? 1,66,315. And how many shares am I going to get? I am going to get each bond into 250 ordinary shares. So 2,000 into 250. 2,000 into 250. 250 into 2,000 shares. So that gives you how much? That gives you how much? What will be my diluted EPS? 11,66,315 divided by 17 lakhs, I think. Yes, 0.686 per share. Is this clear so far? Is this clear so far? Yes. 0.6861. Absolutely right, Saksham. Yes. Is this clear so far? Yes. Shailendra, Manini, Nidhi, Hari, Sumit, Srishti, if you are there, Kaushiki. So far, is this clear? Yes. So far, is this clear? Is this clear so far? Saksham has confirmed, Nidhi has confirmed, Aniket Jan has confirmed. Okay. So as of now, your answer is complete. As of now, your answer is complete. Acha, sir, if I have to calculate, suppose they give you calculate the EPS for year 2. Suppose they give calculate the EPS for year 2. Can I add back 1,66,315? Answer is no. Because year 2 interest is going to change. You have to amortize that liability. It will be 18,47,944 plus this interest is added 166,315 minus 1,20,000 is the coupon which is paid. This whole thing multiplied by 9% will be your year 2 interest. Will be your year 2 interest. We have a problem that is going to explain this for us. Okay. But it won't be 1,66,315 every year. It will slowly start to reduce. It will slowly start to drop down. Is it okay? So this is the change that is there. This is the change that is there as compared to what you used to do in your intermediate. What you used to do in your intermediate. Okay. So I'm rubbing this off. So I hope the liability part is clear. Most of you have confirmed. Most of you have confirmed. Okay. Yeah, that's right, Saksham. Okay. That's right. Okay. So that takes care of the liability. Now let us come to the alternative solution. Let us now come to the alternative solution. Okay. What is the alternative solution? Well, the alternative solution is a issuer can also think that हम इसके लिए cash क्यों दें? We have an option to give cash or to give equity. So we are going to give equity. So if that is the case, the principal amount will never be paid in cash. And since it will never be paid in cash, this is going to be 0. So what is going to be the value of your liability component? Sir, in this case, the value of my liability component is going to be just 3,03,744. And what is going to be your equity component? 20 lakhs minus 3,03,744. And that would give how much? That would give 20 lakhs minus 3,03,744. This is going to be 16 lakhs 96,256. 1696,256. This is going to be your equity component, which will go and sit under other equities. Or itna zyada, obviously, because you are not settling the principal in cash at all. So how can your liability be high? It is going to come down. Okay, it is going to come down, and equity component is going to increase. Okay, so what will be the change here? Well, the effective interest is not going to be calculated as earlier. Now it will be calculated on the revised value. 3,03,744 multiplied by 9%. So 303,744.09. 27,337. 27,337. And you will add back 27,337. 337. Are, have you understood, Manini? Now, did you understand equity? If settlement happens not in liability, but in the form of equity. Did you understand now? Yes. So in such a case, your EPS would fall to 604 per share, not 686. Have you understood? Yes. Is it clear? Okay. So this is the alternative. Our institute alternative is not given. Neither was it loaded on the MCA website. I don't know why, but ideally you have two approaches to this question. You have two approaches. Okay. So that takes care of this particular question for you. 11.68. Okay. Can we proceed further? Can we proceed further? Yes. Okay, Kaushiki is asking if equity will be issued instead of cash, why is there no effect in diluted EPS denominator? There is the impact. No, for every instrument you are going to get 250 shares. Now it is equity or cash, whatever be the impact, I am going to give these equity shares in the future. So therefore, what am I going to impact? I am not going to change anything. No, Kaushiki. Yes. Even though I had assumed it will be settled in liability, still I have a potential equity shares on which I am sitting. So therefore I have to take 250 into 2000. वो option तो है ना अपने पास to settle it in equity. And if I settle it in equity and that is my estimate, I have to take 250 into 2000. So चाहे कुछ भी हो जाए, my answer is not going to change as far as the denominator is concerned. Numerator is going to change, definitely. Numerator will change, not the denominator. Have you understood now? Yes. Have you understood? This is the equity element which is going to be issued. It was there before also, it is there after also. Okay, still I am having a query कि ये समझ नहीं आया है. Okay, fine. One last time हम समझेंगे इसे. Okay, although many have confirmed, but one or two students are saying it's not clear. Okay, all right. What I'll do is, 1 second. Convertible instruments. You can note this down. Okay. Convertible instruments, we have two categories. Compulsorily convertible and optionally convertible. Compulsorily convertible, optionally convertible. I am having two components. One is interest, the other is principal. One is interest, the other is principal. Okay. Interest, usually obligation to deliver cash. Usually this is how it is going to be. Okay. So this will be my financial liability. In our example, it was 20 lakhs into 6% into 2.5312. So that came to how much? In our example, this came to 303,744. 3,03,744. This was the liability component as far as interest was concerned. Okay. Coming to the principal. Now the term used is compulsorily convertible. ये हमारा question नहीं है. Our question was optionally convertible. Here it is compulsorily convertible. So principal is converted to equity. Principal is converted to equity if converting to fixed number of shares for fixed price, this will become equity. This will become equity. Sir, why equity? Fixed number of shares, fixed price? That is Ind AS 109. This whole chart is Ind AS 109. क्यों ऐसा, क्या ऐसा? That can be covered only at that point of time. But this is the standard principles which we are having. Okay. So in other words, my one single instrument is not one. Basically, it is a compound financial instrument. It is a compound financial instrument. It is a compound financial instrument. Compulsorily convertible. Acha. Optionally convertible can be split into two categories. Option of the holder. Option of the holder. Issuer's option. Issuer's option. Okay. Option of the holder की बात करेंगे हम. Let us talk about at the option of the holder. Option of the holder में first one is I am having again two streams of cash flows. One is interest, the other is principal. Okay. Interest, unless given otherwise, obligation to deliver cash. So therefore, this becomes a financial liability. this becomes a financial liability. In our case, we have seen it. It is rupees 3,03,744. Means the calculation is like that. But again, this is option of the holder, which is not my question. Okay. Mine is option of the issuer, which I'm going to touch in a short while. Okay. Principal. Acha, this is interesting. Option is of the holder, yani the one who is holding the instrument, not the one who is issuing the instrument. So the holder can ask cash any point of time. Bhai, wo to uska marzi hai na, usko cash chahiye, equity chahiye. How I can predict? So thoda sa we have to be conservative. We cannot say that we will convince the holder, we will give him equity. Aisa nahi chalega. He is at contractually, he is the one to decide. So therefore, aapke sar pe latakta hua talwar hai. There is a sword hanging on your head. Anytime cash can come and knock on your door saying that give me cash for 20 lakh principal. And therefore, we will treat it as a financial liability with an embedded derivative in that. Derivative being the option that he can ask for equity also. Okay. This is if holder demands cash, holder demands cash, comma, obligation to pay cash, to pay cash. So appears that, therefore appears financial liability, appears to be a financial liability, but holder can ask for equity. तो अभी बोलोगे sir, then it appears to be equity. Then it appears to be equity. Sir, one instrument appearing equity also and financial liability also. So what is it actually? What is it actually? In substance, bond with an option to get shares. It is essentially a bond that is issued with an option to get shares. With an option to get shares, this becomes an embedded derivative. This becomes an embedded derivative. Financial liability with embedded derivative. Financial liability with embedded derivative. And how am I going to do the accounting? You will do split accounting. Do split accounting. Do split accounting. All the principles will be covered with you in financial instruments. Do split accounting considering interest and principal both. You have to consider both of them. You have to consider both of them. So this is the case if it is at the option of the holder. But ये हमारा question नहीं है. Our question is at the option of the issuer. At the option of the issuer. So the issuer के case में, issuer is the company. Company only will decide whether it will give cash or whether it will give equity, whether it will convert to equity. Okay, so company has the choice. So therefore, again, two streams. One is interest, one is principal. Unless otherwise given, comma, settle in cash. Settle in cash. So in our case, did we settle it in cash? Yes. So this amount was 3,03,744. This is 3,03,744. Principal ke case mein, now is the issuer, is the company contractually obligated to deliver the cash? Answer is no. Contractually koi obligation nahi. Contractually issuer only can decide whether he will pay cash or whether he will convert the liability into equity. Option lies solely and solely with the issuer. Yahan ke case mein kya tha? It was with the holder. So company had to listen to what the holder tells and then accordingly he has to give. But in this case, भाई मेरा ऑप्शन है, मेरा चॉइस है, I can decide and I know what I'm going to pay. So technically here, if I have to tell in layman's terms, issuer not contractually obligated to pay cash. Not contractually obligated to pay cash. Hence, I cannot exactly call it a financial liability. Hence, not exactly a financial liability. Technically speaking, it's not a financial liability. Okay, just give me a minute. It's not exactly a financial liability. So वो है क्या? So what it is? We have two treatments. General, treat as equity. Treat as equity. In which case, we will look at our solution. Equity value comes to how much? 1696,256. In which case, equity value comes to 1696,256. 1696,256. If not, no intention of conversion. No intention of conversion by management. Management will be afraid कि हमारा stake dilute हो जाएगा. All those things are there. So they will say, भाई हमें convert नहीं करना है. We want to protect our stake, whatever be the cases. Okay. Then in that case, redeem. Financial liability with derivative. This becomes a financial liability with derivative. The institute has solved this, assuming this. Whereas what we are telling is this is also possible, but this also can be done. And this is picked up from the MCA solutions. Okay. This is put in the study mat, but the source is there. You can have a look. Okay. You can have a look. So this is how you are going to think. And we have the solution at the option of the issuer worked out as if there is no intention of conversion. Is it okay now? So now we have done the workings accordingly. We have now done the workings accordingly. I showed you both the alternatives. Important is two things. One is you have to be careful about this part. That is the interest that you are going to add back. This will be based on effective interest rate. On liability component. Whatever you assume, you will apply the 9% on the liability component, not on 20 lakhs. 6% to aap bhul jao. 6% is not going to hit the P&L. 6% is a cash outflow, which is a liability settlement. Kaushiki, is it understood now? Yes. Manini, is it clear? Okay. In case of holder to decide, we have to calculate diluted EPS as per both the alternatives or only one asked. See, my advice, follow what the study mat has done. Follow the initial solutions. Okay. Are you convinced 100%, Kaushiki? Okay. Let me know if you are 100% convinced. Okay. See, in the case of एग्जामिनेशन, बिकॉज अल्टीमेटली हम एग्जाम देने वाले हैं सर, कहानी तो बाद में आएगा, सुनने में अच्छा लगता है, हमें तो मार्क्स चाहिए. मार्क्स के लिए क्या करना है? मार्क्स के लिए do what the study mat has done as of now. There is no intention of conversion by management. Treat it as a liability. Do the diluted EPS working and get the answers done. Safety sake, for safety, okay, अपना ज्ञान दिखाने के लिए, you have to exhibit your knowledge in the exam. You write Alternatively, we can treat the principal to be settled by way of conversion, since it is at the option of the holder, in which case the solutions will change. Itna sahi likho, bas write only this. Okay, don't proceed to calculate by both the options, because time क्यों खराब करना? You get this question for say 8 marks. Why do you want to give a 12-mark answer and then lose time, when with one method only you can get the entire 8 marks? Does not make sense. So therefore, solve it using this method, but give an alternative reference to this method in your exams. You should be getting full marks. Okay, we've asked the institute also. We'll check, okay, like whether this alternative can be combined. Is it okay? All clear? Who else is there? Nidhi Deshpande, is it okay? Shailendra Singh, Hari, Sumit Jain, all clear. Aniket Jain, Kaushiki, all clear? Yes. Convinced? Dimag theek hai? Yes. Yes. All right. Yes. करने को आप दोनों कर सकते हो, but I'm not in favor of that. You are losing lot of time. Okay. It's not so simple also. Okay. So this takes care of this part. Convertibles. You can just put a screenshot of this. Okay. You can pull a screenshot of this. I'll be rubbing these figures because this is not related to the question. Okay. I'll be keeping this 3,03,744 here. Okay. That was just to explain how you got it. Okay. All right. Fair enough. Acha, Soham is there. I didn't see you. Okay. So that takes care of this part, and we are done with convertibles. Okay. We are done with convertibles. Yaar, ye kahan se aata hai? Okay. All right, let us move on to another question relating to convertibles. Let us move on to another question relating to convertibles. You can mark this particular question as important. You can mark this particular question as important. Okay, it has been asked once in your RTP. RTP it has come, and you can mark this as important. Okay. CAB Limited is in the process of preparation of the consolidated financial statements of the group for the year, and the extract of the same is as follows. You are given profit for the year 39,000, 3,000, 42,000, other comprehensive income, total comprehensive income. The long-term finance of the company comprises of the following. कितना है 10,000 lakhs 10 lakhs 20 crore equity shares at the beginning of the year, and the company has issued 5 crore shares on 1st July at complete market value, at full market value. So this is adjustment for weighted average number of equity shares. 8 crore irredeemable preference shares. Irredeemable matlab paise nahi milenge, you are never going to get the money. These shares were in issue for the whole of the year. The dividend on these preference shares is discretionary. Discretionary matlab what? It is at the choice of the company. It is at the choice of the company, and therefore, though it is a preference share, it is exhibiting characteristics of equity. It is exhibiting characteristics of equity. Why? It is irredeemable. Matlab cash kabhi dena hi nahi hai unko. And the dividends are discretionary. They can never demand the dividends. Okay. Jab company ko lagega, it can give. It may not give also. It is not contractually obligated to deliver cash. So it becomes equity. Okay. Next one. 18 crores of 6% convertible debentures issued on 1st April 20x1 and repayable on 31st March 20x5 at par. Interest is payable annually. Okay. As an alternative to repayment at par, the holder on maturity can elect to exchange their convertible debentures for 10 crore ordinary shares in the company. On 1st April 20X1, the prevailing market interest rate for 4-year convertible debentures having no right of conversion was 8%. Using an annual discount rate of 8%, the present value of rupee 1 payable in 4 years is 0.74. The cumulative present value of rupee 1 payable at the end of years 1 to 4 is 3.31. So you are given PVAF also, you are given present value factor also. In the year ended 31st March 20X3, CAB Limited declared an ordinary dividend of 0.1 per share and a dividend of 0.05 per share on the irredeemable preference share. Compute the following. The finance cost of convertible debenture and its closing balance as on 31st March 20X3 to be presented in the consolidated financial statements. TK will do that. The basic and diluted earnings per share for the year ended 31st March 20X3. Assume that income tax is applicable to CAB Limited and its subsidiaries at 25% at 25%. Okay, so this is your question. Quite a number of things are there, but let us proceed as usual step by step. Okay, first one is we are seeing profit for the year is given, other comprehensive income. By now you would be familiar कि P&L दिखता कैसा है. We call it as statement of total comprehensive income. Total comprehensive income is divided into two segments. One is the profit and the other is other comprehensive income. So ye total. So now the question in your mind is, sir, should I take 39,000? Should I take 44,000? Answer is you will consider 39,000. Okay, I know it's 42 and 47, but just a minute. Okay, we will consider 39 because other comprehensive income is basically items which move in the reserves, जैसे revaluation of asset or actuarial adjustments under employee benefits. All these are the movement in reserves. Okay. Ind AS 109 measuring equity instrument using fair value through OCI irrevocable option. All these are moved through OCI and ultimately they get transferred to their respective reserves. So basically OCI is on account of movement in reserves. It is shown on the statement of the P&L because it is of vital information to the readers. Nobody will look at the movement in reserves carefully the way they look at the profit and loss, and that is why this movement in reserves is brought under other comprehensive income. Otherwise these are not profit yielding transactions and therefore other comprehensive income is excluded. Other comprehensive income is excluded. So that is the first part. Second, so you will be considering profits for the year. That's it. The next one is, sir, we are preparing consolidated financial statements of the group. Okay. So group means what? I have a parent. I have subsidiaries. You would have studied this. Okay. S1, S2, S3. Okay. We name it as CAB Limited only. No. CAB Limited has subsidiaries S1, S2, S3. It's part of a group. CAB Limited के अपने shareholders है. They have their own shareholders. That is, one is the non-controlling interest and the other is the controlling. The other is one second. Nope. S1, S2, S3. They are having NCI, which we call as minority interest. Okay. And the other shareholder is obviously the parent. So CAB Limited. Now I have to calculate the EPS of CAB Limited. I have to calculate the EPS of CAB Limited. When I have to calculate the EPS of CAB Limited, I will obviously look at the profits of the subsidiary which are attributable to CAB. It is like CAB has entered into a partnership with NCI. You can take it in a very basic way, something like this. CAB has entered into a partnership with NCI to run subsidiaries S1, S2, S3. When I have to look at CAB Limited's profits, I can only take the profits which are attributable or which are in the share of CAB Limited. I cannot take NCI's profits. वो तो उसका share है. It is his share of profits. So therefore, we will consider only profits attributable to CAB Limited. That means this whole column becomes useless. This whole column becomes useless. Total column also becomes useless, and other comprehensive income and total comprehensive income also becomes useless. So the only useful thing in this table is our starting point of 39,000. Have you understood this? Yes. Why it is 39,000? Did you understand? Yes. Is it clear? Any doubts? We will be moving with 39,000 only because number one, profits attributable to NCI. Profits attributable to NCI are not attributable to the parent, that is CAB Limited. So iske liye that whole column is eliminated. We are also interested in EPS, not in reserves movement routed through other comprehensive income. And that is why our starting point is going to be 39,000. Our starting point is going to be 39,000. NCI bhi nahi aayega, total also will not come. Okay. So that takes care of the first part. Now we move on to calculate the EPSs. Now we move on to calculate the earnings per share. Okay. All right. So first things first. This is an illustration also, no? Question 6, test your knowledge. Okay. All right. So basic EPS. Basic EPS. 39,000. This is profit after tax. From here, from 39,000, this is profit after tax. I have to deduct preference dividends. I have to deduct preference dividends, if any. Do I have preference dividends? Yes, 0.05 per share on the irredeemable preference shares. Irredeemable preference shares. So 8 crores irredeemable preference shares. That means this is 80,000. It is in thousands, no? Rupees in thousands. So figures in thousands. So 80,000 into 0.05. 80,000 into 0.05 into rupees 0.05 divided by what is the total number of shares? Sir, the number of shares is 20 crores. 20 crores means how much? 2 lakhs in thousands. Okay, so 2 lakh shares. These shares were there for entire 12 months plus 50,000 shares issued on 1st July. So these shares were there for 9 months. 50,000 into 9 by 12. So that gives you how much? That gives you how much? It's 2 lakhs, 237,500. And this is so this comes to is this okay? Have you understood basic EPS? This is profit after tax. This is preference dividend. Together, it gives you net profit attributable to equity shareholders. And therefore, your dividend, sorry, your EPS, this is your mains. So that gives you 0.147 per share. Have you guys understood this? Saksham is right. Soham, uh, Shailendra, Sandhya Gauri is not there. Hari, Sumit, Aniket Jain. Have you guys understood? Yes. All right. So that takes care of basic. We then move on to diluted EPS. For diluted EPS, we are having convertibles. We are having convertibles. Okay. Proceeds of convertibles is equal to कितना आया भाई convertibles का 18 crores 18 crores we have to do it in rupees in thousands. Okay, so 18 crores means rupees 1,80,000 in thousands. Okay, 1,80,000. Okay, so 1,80,000. Now this will be split between two components. The first one is liability. The second is equity. The second is equity. Let us read the question. As an alternative, the holder can elect to exchange their convertible debentures. So if I look at my chart, where do I fall? It is optionally convertible at the option of the holder, at the option of the holder. So therefore, can I record the principal portion also as equity? Answer is no. यहाँ तो कर दिया. Here you did it. अरे but here it was at the option of the issuer. Issuer को तो पता ही है वो क्या करने वाला है. But ultimately in the case of the holder, I am always having a hanging sword on my head that he can suddenly come and ask for cash. So I cannot be that much also, what you can say, I cannot ignore prudence also to such an extent. And therefore, we will have to take the principal component also as a liability. We will have to take that also as a liability. So how do I calculate that? Well, first is the interest. 1,80,000 into 6% is the coupon rate into 4 साल तक पे करेगा, so into 3.31. 3.31. This is present value annuity factor 8%, 4 years. Plus 1,80,000 into 0.74. Present value factor 8%, 4th year. Is it okay? Yes. Yes. Ultimately, we are recognizing the principal also and the interest also as a financial liability, So this comes to how much? 1,68,948. $35,748 and principal 168,948. 168,948. दोनों को ऐड कर दो ना सक्षम. You got your answer. That's right. So equity will be a balancing figure. This will be your balancing figure. Have you understood? Yes. Yes. अरे बाबू समझा. Amortization table. When was this loan issued? 1st April 20x1. Okay, so we are in 20x3, yani 2 years later. Okay, so therefore year opening balance, effective interest rate at 8%, coupon rate, and closing. Okay, so year is 20x1 x2. It all started with a liability of 1,68,948. On that, we will 168,948 into 0.08. 13,516 is the effective rate. सर आप कूपन कुछ पे करोगे? डेफिनेटली आई एम गोइंग टू पे ना. कितना है वो सर? 18 crores into 6%. 18 crores into 6% gives you 10,800 in thousands. Okay, so 10,800. 10,800. So what will be your closing? So 168,948 plus 13,516 minus 10,800. So 171,664. 171,664. All right. All right. Next, I'll address your query, Kaushiki. Just give me some time. 1,71,664 into 0.08. 13,733 minus 10,800. $174,597. Okay, so ये हो गया amortization table. Continue करोगे, it ultimately becomes 0, but I am not here to do that. I am here to answer the questions. The finance cost of convertible debentures and its closing balance as on 31st March 20x3. So the finance cost is 13,733 and the closing balance is 1,74,597. 174,597. Okay. Diluted EPS. We are in which year? We are in 20x3. Okay. 20x2 x3. So how am I going to calculate this? Well, whatever I do, starting point is my basic EPS. So rupees 35,000 divided by 2,37,500 shares plus what else? 13,733 is the interest. See what I'm deducting. I'm not adjusting 10,800. I am adjusting 13,733 for the tax also. Ultimately, we are adding back whatever benefits we are getting net of tax. So 1 minus 0.25. And then we are having 237,500 shares plus 1 lakh shares. Plus 1 lakh shares. Sir, how did you get 1 lakh? Well, exchange their convertible debentures for 10 crore ordinary shares. 10 crore ordinary shares is nothing but 1 lakh in thousands. Okay. So that gives you how much? That gives you okay. So now $13,733 into 0.45,300 divided by 0.134 per share compared to his basic 0.147, 0.134 diluted. And that's it. So did you understand financial instruments? Yes. Did you understand financial instruments? Application somewhat. Yes, Kaushiki, your question is there. I'll address it. Okay. Did you understand the limited application of financial instruments to EPS? Yes. Kaushiki has confirmed. Manini, Shailendra, Saksham, Soham. Did you follow? Yes, Kaushiki. Other confirmations, please. Have you guys understood? Manini, Aniket Jain, Sumit Jain, Hari. Yes. Sir, how the closing will be zero? हो जाएगा वो. I know why you are getting worried, because you are seeing an increasing trend in the first 2 years. वो हो जाएगा. It will come to zero. Okay. What you can do now, pick up the lease questions which I had shared with you. You can see how it's becoming zero there. Same way it becomes zero. हो जाएगा वो. Don't worry. Okay. All right. So that takes care of financial instruments, limited applicability. All right. Now, just an important part relating to diluted EPS. Small part, you would already know this. When I say diluted EPS, diluted EPS will always be less than basic EPS. तभी तो dilution बोलते हो ना. Dilution means smaller in value as compared to the basic. If diluted EPS is greater than basic EPS, if at all diluted EPS is greater than basic EPS, such an instrument is known to have something known as anti-dilution potential. Anti-dilution potential or anti-dilutive potential. Okay. Ignored from EPS workings. where any instrument has an anti-dilutive potential. Anti-dilutive potential means what? It is having the potential to show your diluted EPS is greater than the basic EPS, and therefore such anti-dilutive potential are ignored from the earnings per share workings, Okay, so question is, sir, एक मिलता है तो ठीक है, we can look at our workings and give the guidance, but what about multiple units? What about multiple instruments? What about multiple instruments? You have convertible debentures, you have convertible preference shares, you have options, you have warrants, you have this, you have that. How do I calculate the how do I calculate the EPS in such case, the diluted EPS? So there is a particular mechanism which is there. It's there in the sheet which I have shared with you. Okay. Okay, I have given you some questions to solve, but these ignore the applicability of standards on financial instruments. Okay, so they are just for getting your concepts on Ind AS strengthened. Don't worry about that IFRS. Okay, this financial instruments, IFRS, Ind AS treatments, don't worry about that. Okay. All right. So now coming to convertibles, not convertibles, dilutive. Okay, so let us pick up one question. Okay. All right. Let us look at this one question. This is picked up from your intermediate. Okay. So let us just pick up the question, see the solution. You should then be clear as to how you will prioritize which instrument should be included in your EPS workings. Okay. So from the following information of Bhadrachalam Limited, determine the order in which the dilutive potential equity share should be considered in the computation of diluted EPS. क्या दिया? Net profit attributable to equity shareholders, number of equity shares outstanding during the year, average fair value of one equity share during the year. Details of potential equity shares are options 1,20,000 with an exercise price of 75 per share, convertible preference shares 10 lakh entitled to a cumulative dividend of 8 per share. Conversion ratio is 4 equity shares for every preference share held. 15% convertible debentures of rupees 100 each, 12 lakhs. Each debenture is entitled for 2 equity shares. Assume corporate income tax rate is 30% and dividend distribution tax rate is 10%. Okay. All right. So go through this question and tell me what are my dilutive equity shares. Okay. I'll just come in a minute. Okay, so tell me now, what are my diluted, what are the components in my capital structure that have the potential to dilute? I am having options I am having convertible preference shares and I am having convertible debentures. So I have three categories of instruments because of which I am having possible dilutions. So now, how should I consider the impact of dilution? See, what can happen is I am having basic EPS. I will have to calculate diluted EPS. Okay. See, problem that happens with diluted EPS. Now, please understand carefully. I can have basic EPS working plus effect of first one, options, second one, preference shares, third one, debentures. Convertibles, all are convertibles. The problem is, should I consider basic EPS plus options only? Should I consider basic EPS plus options plus convertible preference shares? Or should I consider basic plus option plus preference shares plus debentures? Should I consider this? Because what happens is, it is quite possible that basic plus options will be dilutive. Basic plus preference shares could be anti-dilutive. Basic plus debentures could be dilutive. Any permutation combination can happen. And therefore, the problem that arises is, how do I select which of the potential equity shares should form part of my working and which one should not form a part of my working? So for that, we will ideally have to take least of the three. Ideally, we will have to take least of the three. But उसके लिए आप कितना DPS ढूंढते फिरोगे? Will you do a working basic plus options one, basic option preference shares one, basic option preference share debenture one, basic preference shares one, basic debentures one? Will you do this 6, 7, and then will you do 2, 2? Will you do 3, 3, and then will you come? It will be a very long process. So there is a way in which we can decide how the EPSs will be calculated. Okay. So for that, the first step that we do is we calculate something known as additional earnings. We calculate something known as additional earnings per incremental share. See, this is not there in your study mat, but it has come once in the exam. That is why I'm taking this. I'm taking this for you. Okay. ये exam में एक बार आ चुका है. I had one student who had done the whole working properly, but unfortunately, because of the incremental additional earnings per incremental share, usko he had not done that. Okay, but otherwise his solution was almost correct. He lost half the marks allotted to the question in that. Okay, so you are expected to know some things when you are coming from your intermediate. Okay, so we proceed to calculate additional earnings per incremental share. So what do you mean by additional earnings per incremental share? It means if those shares, if those instruments are converted to equity, what will be the additional EPS that I am going to earn? What will be the additional EPS I am going to earn? For example, options are converted to shares. Options are converted to shares. Will it have any impact on my earnings? No. So additional net profit is 0. Number of options is how much? Well, options is 1,20,000. Exercise price is 75. So number of shares issuable, so the weighted average number of dilutive options, we are calculating something like this. Shares issuable under option 1,20,000 into 100 minus 75 divided by 100. So that comes to 30,000 shares. These are free element. This is the free element. Okay, so 30,000 shares. So the additional earning per share is 0 because There is no impact on my numerator only. There is no impact on my numerator only. And therefore, additional earnings is zero. Additional earnings is zero. Let us now look at preference shares. Let us now look at preference shares. When my preference shares are getting converted to equity, the impact on the numerator is that the preference dividend starts to get saved. The preference dividend starts to get saved. Along with that, the dividend distribution tax, if any, also starts to get saved. That also starts to get saved. So, हम करेंगे कैसे उसको? We do it something like this. See, we are having preference shares with a cumulative dividend of 8 rupees per share. So 10 lakh into 8, that gives you 80 lakhs, and you are given dividend distribution tax is 10%. So if preference gets converted to equity, I will add 88 lakhs to the numerator because अब तो preference share है ही नहीं. So I will add 88 lakhs to the numerator. So 88 lakhs divided by 40 lakhs shares, that gives you 2.2. This is earnings per incremental share. This is 2.2. And finally, when I look at my convertible debentures, what I am having is, we will have to look at the convertible debentures. 12 lakhs into 100 each into what is the rate of interest? The rate of interest is 15%. So 12 lakhs into 100 into 15%. Will this be allowed for tax savings? Answer is yes. It's debenture interest, it's deductible. Into 100 minus 30%. So that gives you 1 crore 26 lakhs. So if you convert debentures to equity, the numerator increases by 1.26 crores. 1.26 crores, whereas the denominator increases by 24 lakh shares. So 5.25 is your earnings per incremental share. And then you assign the ranking. The lowest figure is going to get first rank, and you arrange it in ascending order. So this becomes 1, this is 2, this is 3. And now when I have to calculate the diluted EPS, we are going to look at how it is done. We've already done this. Net profit attributable 1.5 crore. Number of equity shares outstanding is 25 lakhs. So basic EPS is 1 crore 50 divided by 25. So that gives you 6. This is your basic EPS. This is your basic EPS. Then the next adjustment, now you will give step by step. The minimum one is options. So you will always then move on to options. So after adjustment for options, profit, no impact, but shares is going up. So therefore, after options, what happens is my EPS comes to 5.93. So if I consider only options, I will have 5.93 as the diluted EPS. Is it lower than the basic EPS? Yes. So therefore, this is the dilutive potential equity share. We will keep it in the working. We then move on to preference share adjustment. Preference share क्या बोलता है? 88 lakhs is getting added in the numerator, 40 lakhs in the denominator. So 88 lakhs, 40 lakhs. After preference share adjustment, what is happening is my diluted EPS comes to 3.64. So I would have considered two instruments by now. The first one is options, the second one is preference shares. So 3.64. This is going to be again dilutive. It is going down and down. Pehle 6, then 5.93, and now it is 3.64. And finally, debentures. Debentures के case में 1.26 crores and 24 lakhs. So how do I do that? Well, add adjustment for debentures 1 crore 26 lakhs and 24 lakhs. So that when you consider, the EPS starts to rise. The EPS starts to rise. It is 4.08 versus 3.64. You have to determine, sir. You cannot say that, sir, 4.06 तो ultimately 6 से तो कम ही है ना सर, तो therefore हम 4.08 क्यों नहीं दिखाएंगे? The objective of the standard is to give the worst possible picture of your EPS. That is the objective of Ind AS 33 diluted EPS. It is not going to consider all the shares and give you the impact. The job of Ind AS 33 is to tell you, भाई सबसे खराब EPS ही disclose कीजिए आप. Give only the disclosure for the most what you can say, the worst case scenario that is possible. And therefore when 3.64 becomes 4.08, we can tell that debentures have an anti-dilutive potential. Why they'll be having anti-dilutive? Because they are tax deductible. So therefore earnings पे impact कम रहता है, earnings पे impact automatically कम हो जाता है. So these are anti-dilutive, but options are dilutive, preference shares are also dilutive. So therefore, what are you going to report as diluted EPS? You will be reporting 3.64. You will be reporting 3.64 and not 4.08. Not 4.08. Have you understood? Yes. Did you understand? This is picked up from intermediate only. Okay. Have you guys understood the way the working flows? Yes. The flow is important for you to understand. Yes. First, earnings per incremental share. Assign the rankings. And then we are doing the comparison. Yes. No, that is what I explained, Manini. See, I agree that this 4.8, when I compare with this basic, I agree it is dilutive. But between 4.08 and 3.64, which is more dilutive? Sir, obviously this is more dilutive. So what are you going to disclose? You are going to disclose 3.64 because this is the worst case scenario for you. This is the worst case scenario possible. Sir, in that case, debenture ka impact gaya hi nahi, gaya hi nahi. It has not gone into the impact. We can always explain that we did not consider because it was going anti-dilutive. It was going anti-dilutive. Have you understood? Yes. Yes. All are dilutive. कायदे से देखोगे सारे dilutive है. But हमें चाहिए वो combination. We need that combination which is the worst case EPS, which is the worst case EPS. Okay. Dilutive तो तीनों है. All the three have an impact of reducing the earnings per share. Is it okay? Yes. Have you guys understood? Okay. So just do this one question. It's not there in your study mat, but I want you to do it because वो exam में एक बार आ चुका है. It has come in the exam once. So that is why just try it out. Okay. So I want you to do this for homework. Homework. Okay. Try this out for homework. Solutions are given to you. Okay. So that takes care of this. All right. Dilutive EPS is done. Do you guys need a break or shall we continue? Shall we continue? Is this session interesting? Soham, Shailendra, Saksham, Hari, Sumit, Aniket, Manini. We continue. Saksham said continue. Shailendra is telling break. What about the others? Kaushiki, have you followed? Kaushiki, did you follow? Okay, fine. So we are left with the last part of this standard now. And this is like more important in the sense that it contains two small concepts. Okay, one is okay. Yeah, I also pace is fast. See, I hurried with this particular thing only because it was what you say. ये आपके study mat में नहीं है, because it came once in the exam. I just thought of completing it. That is why. Okay, so only for that reason I hurried this. This is what you've done in intermediate. So this one thing I hurried. The last part that is there is two small concepts. The first one is a control number concept, and the other one is contingent shares. Okay, once we do these two things, then we are done with the standard. Okay, so just note presentation of EPS. Presentation, you can take a note of this. Presentation of EPS. Okay, first one, EPS basic and diluted is presented on the face of the P&L. Is presented on the face of the P&L. Further, okay, second point. Further, EPS from first one, continuing operations. Second, discontinued operations. Third, total operations. Total operations needs to be disclosed. Needs to be disclosed. So you would have continuing operations, discontinued operations, and total operations. All the three you need to disclose. All the three you need to disclose. Third point, EPS from continuing operations is the control number in deciding whether an instrument's conversion is dilutive or not. Okay, what do I mean by control number? I will look at EPS from continuing operations, the basic EPS. I will look at the diluted EPS from continuing operations. Okay, so fourth, okay, now see, please pay attention. Okay, continuing operations, discontinuing operations, total operations. Okay. Following data is given. This is an example for you to understand. Okay. Okay. Profit rupees 48,000. This is from the continuing operations. Okay. What I'll do is total. Here the loss is 72,000. As a result, your total loss is rupees 24,000. Your total loss is 24,000. Okay. Ordinary shares कितना है? 20. Ordinary shares is 2,000. 2,000. Okay. Potential shares 400, 400, 400. All this. Okay. 400 ही है. Because we are calculating EPS for each of them, we will be looking it on a total perspective. Okay. Now, basic EPS 48,000 divided by 2,000. 72,000 divided by 2,000. 24,000 divided by 2,000. So this comes to 24 per share, 36 per share, loss of 12 per share. Loss of 12 per share. Okay. Basic EPS. Diluted EPS. Potential shares will take it as options. Okay. So there is no impact on earnings. Okay. So rupees 48,000 by 2,400 shares. So this comes to 20 per share. $30 per share. Okay. So this is your basic EPS, diluted EPS. Okay. Now see, look at this figure. Basic EPS is rupees minus 12. Diluted EPS is rupees minus 10. So can I say that diluted EPS is greater than basic EPS? Can I say this or not? Can I say this or not? Bolo? Can I say this or not? Basic में the loss is 12 per share. Diluted में the loss is only 10 per share. So can I say that diluted is greater than basic? Can I say that diluted is greater than basic? अरे yes or no? Come on. Basic के केस में 12 is my loss per share. Diluted it is only 10. So in other words, diluted is greater than basic. In other words, diluted is greater than basic. It is. So now the first knee-jerk reaction will be, then don't report options. Don't report options. The standard says, wait, don't come to such a conclusion. Don't come to such a conclusion. You will decide the comparison between basic and diluted based on control number. Based on control number. What is your control number? Control number is EPS in the case of operation, in the case of continuing operations, because by in the future these operations are what are going to continue. In the future ये चलने वाला है. If you look at total operations, total will include discontinued, and you have discontinued an operation means probably it was not doing well. So the standard comes to your guidance and tells us that don't look at total operations only. You will have to look at continuing operations for whether there is an anti-dilutive impact. So the first step is idhar aank marne ka. You have to look here, nazar maro on continuing operations. In the continuing operations, basic is 24, diluted is 20. So can I say that basic is more than diluted? Can I say that here basic is more than diluted? Answer is yes, you can say. And because basic is greater than diluted, control number test is fulfilled. What is it fulfilling? It is fulfilling the test that your options are indeed dilutive and not anti-dilutive. And therefore, now you will proceed to report 12 ka loss. You will also proceed to report 10 ka loss. Sir, even if diluted is greater than basic, yes, even if it is greater than basic, because we are looking at continuing operations. We are not looking at total operations to make a decision. Is it okay? Yes, user will be interested on continuing operations EPS, and that is why we are going to take this as the control number. We are going to take this as the control number. Did you understand? Yes. Have you guys understood? Yes. Continue to report. Report both. Basic and diluted. Are, have you understood? Okay, Aniket, Kaushiki, Manini have confirmed. Yes, I hope the others would also have understood. So this is the example of continuing operations. Whether it is what you can say, your EPS from continuing operations, the basic is higher than the diluted, then that is good enough. You can proceed to total EPS directly. Okay, total EPS directly. Okay, so that takes care of control number concept. And we then move on to contingent shares. Contingent shares. I want all your attention now. I want all your attention because ये थोड़ा सा जो है ना, it is tricky. It is a little bit tricky in the sense that it appears difficult, but थोड़ा सा सोचने से आपको आंसर मिल जाएगा. You will get the answer if you just think a little bit. Okay. Let us do it with the help of the question only. That should kind of make things easier for us. Okay. So slide number 71, 72. Okay. See, ordinary shares outstanding during 20x1, 10 lakhs. No options, warrants or convertible instruments outstanding during the period. So ordinary shares is 10 lakhs. An agreement related to a recent business combination provides for the issue of additional ordinary shares based on the following conditions. 5,000 additional ordinary shares for each new retail site opened during 20x1. New retail site opened, we call this as a retail contingency. एक साइट खुल गया 5,000 शेयर दे दो, दूसरा साइट खुल गया और 5,000 दे दो. So important is opening of a site, not that the site should remain in operation throughout the year. Site खुल गया ना, बस बहुत हो गया. So opening of a site is the trigger event for issuing 5,000 additional ordinary shares, and then 1,000 additional ordinary shares for each 1,000 of the consolidated profit in excess of 20 lakhs for the year ending 31st December 20x1. So this becomes earnings contingency. Earnings contingency. What do I mean by earnings contingency? Bhai, I am going to get extra shares depending on how much consolidated profit is earned. So that is known as earnings contingency. Retail sites opened during 20x1. One is opened in May, another is opened in September. Consolidated year-to-date profit attributable to ordinary equity holders of the parent entity. So 11, 23, 19, 4 lakh 50 loss and 29 lakhs. Calculate basic as well as diluted EPS. So these are what we call as contingent shares. These are what we call as contingent shares. The retail contingency as well as the second one is the other contingency. कौन सा है वो? Earnings contingency. So what the standard tells, and you can note this down, for basic EPS. For basic EPS, shares are included in the basic EPS. Our shares are included in the veins from the date the conditions are fulfilled. From the date the conditions are fulfilled. That is when shares are issuable. When shares are issuable. Always remember, basic EPS में estimation does not work. It is based on facts. It is based on past data. So that is your basic EPS. Next we move on to diluted EPS. Tell me one thing. For every shop which is opened, 5,000 shares will be given. Don't you think this is a potential share? Don't you think this is a potential equity share? Yes. Don't you think so? For every amount that is earned in excess of the threshold which is prescribed, we will be issued additional shares. Don't you think that these are kind of potential shares? Don't you think both the retail contingency, earnings contingency, these are potential shares? Yes or no? Bolo. 5,000. An agreement provides for issue of additional ordinary shares based on the following conditions. 5,000 additional ordinary shares, 1,000 additional ordinary shares. So don't you think that we are having these these shares available? Yes or no? Yes, it is potential. वो है potential. So what the standard gives the guidance is, In the case of diluted EPS, shares are included. See, देखो, we are on 1st of Jan till 31st December. ये retail site के conditions हैं. These earnings contingencies are there. So now the question is, as on this date, I have to calculate diluted EPS. Just understand what is the problem I'm facing here. So if I have to calculate diluted EPS, I will need potential shares. हाँ सर, हमें चाहिए. Sir, potential shares के लिए you are having a shareholders agreement. You are having a shareholders agreement. In that shareholders agreement, you are having a retail site. You are having a retail site condition. Sir, retail site in the future, एक भी खुल सकता है, 5 भी खुल सकता है, 10 भी खुल सकता है, 1000 भी खुल सकता है. So what am I going to estimate? Do you think 1 will open in the future, 2 will open in the future, 5 will open, 10, 15, 100? कितना आप assume करोगे? आप नहीं कर पाओगे assume. Yes, if you start to do those kind of assumptions, you will never be able to achieve a true and fair view. You will never be able to achieve a true and fair view. Okay, the same goes with earnings also. Future mein earnings, what are you going to consider? What are you going to consider? You cannot consider based on estimates. Sir, we will estimate his performance in the future. How can you estimate that? That is not something in your control, and therefore it is wrong on our part to estimate. But sir, if we don't estimate potential shares, we need to calculate the preference. You're having potential shares, so we need to calculate diluted EPS. Hai bhai, karna to padega. But what the standard says is shares are included in current year as potential equity shares only if shares are issuable. Considering current period to be end of accounting period. To be end of accounting period. Sir, means what? It means that 31st December 20x1 is the end of the accounting period, and you do the diluted share calculation based as if 31st December is your what you can say, based on as if 31st December is your deadline. Okay, current period will be the end of the accounting period. Okay. Second, potential shares are included from date of contingent share agreement or beginning of the year whichever is later. Prior period restatement Not done. Prior period restatement, not done. So in the case of diluted EPS, I cannot assume how many retail sites will come up in the future. तो मैं वो estimate नहीं लगा सकता. Neither can I estimate the what you can say. Neither can we estimate the earnings. Neither can we estimate the earnings. So what the standard tells, standard says आप future का नहीं कर सकते ना, that is fine. What you do is in the current period, have you met these conditions? If you have met these conditions, current period will be considered as the period for 2000, will be considered as the period for the purpose of calculating your EPS, for the purposes of calculating your EPS. Have you understood? Have you understood, guys? Yes. Have you understood? Is it right? Not fully, but it is not fully right. But the issue is that at least I'm having a diluted EPS per share getting calculated. I'm having a diluted EPS being calculated. Earlier, it was not getting recorded. Earlier, it was not getting recorded. Now we will do the accounting. And the meaning of these 3 points, we will look now with the help of this question. Okay. Let us see this question, try to solve it. Okay. And then we shall understand the meaning of these points one by one. Okay. Points ka meaning aayega. Don't worry. Okay. See, सबसे पहले 20x1. Let us calculate basic EPS. Let us calculate basic EPS. Example, I'll be taking this question only. You will understand. Okay. 10 lakhs shares. Okay. And what is my earnings? My earnings is 29 lakhs. Okay. 29 lakhs. Okay. Now, look at the information. You are at this date, 31st December X1. In between, one retail site was opened. So can I say that 5,000 shares are already issued? Yes, sir. You can definitely say that. In the middle of the year, another retail site was opened. So can I say that another 5,000 shares were issued? Yes. So opening balance 10 lakh, 5,000 issued on 1st of May, 5,000 actually issued on 1st of September. So can I say that both of them, both the shares, 5,000 shares each, can I say that these are the shares which have arisen actually in the current period? Answer is yes. So can I say we will have to consider them for my weighted average number? Yes, you will have to. Are they potential shares? No, they are no more potential on 31st December. They are actual shares. Actually, आपका capital बढ़ा है because of those shares. And therefore, we will be considering them. This first lot of 5,000 will be considered for the period May to December. That is 8 months. The second lot of 5,000 will be from September to December for 4 months. Okay. So 29 lakhs divided by, initially I am having 10 lakh shares plus 5,000 into 4 by 12 plus another lot of 5,000 issued in September. Sorry, ये 8 by 12 होगा. Won't make a difference, but still. Plus 5,000 into 4 by 12. Plus. Okay. Have you understood this part? Have you understood this? Please answer. इतना समझा अपने को? Have you understood this part? Yes, Kaushiki, did you understand this? Did you understand this? Yes, Aniket Jain. Okay, now you tell me, abhi mujhe batao, tell me, there is an earnings contingency. there is an earnings contingency. This earnings contingency क्या बोलता है? For every earnings in excess of 20 lakhs, for every earnings in excess of 20 lakhs, I will be issuing 1000 extraordinary shares for each 1000 of consolidated profit exceeding 20 lakhs. मेरा प्रॉफिट कितना है? 29 lakhs minus 20 lakhs. This is 9 lakhs divided by rupees 1000 into 1000. So that gives you 9 lakh shares. That gives you 9 lakh shares. Okay. So now my question to you is, 9 lakh shares. Should I include this in weighted average number or should I exclude this in weighted average number? First case was clear. Second, this was clear. This was clear. Now you tell me this 9 lakh shares, whether it is to be considered or it is to be ignored. Is it to be considered or is it to be ignored? Kaushiki is saying include. What about the others? Soham, Manini, Aniket Jain is also saying include. What about Saksham? What about Shailendra, Nidhi Deshpande, Hari, Sumit? What do you guys think? Should we include this in weighted average number or should we exclude it and not consider it for basic EPS? Guys, please think and answer. Manini is also saying it should be considered. Shailendra is also saying it should be considered. I'm saying it should not be considered. I'm saying it should not be considered. Sir, but profit to 29 lakhs aa raha hai na? I again take you back to one of the cases where we discussed when is my profit actually getting determined. Is it getting determined on 31st of December, close of business hours, or is it getting determined at 11 hours, 59 minutes, 59 seconds? When is my profit getting determined? My profit gets determined on this date. My profit gets determined on this date for the period. So therefore, profit determine हो गया. अगले second shares issue कर दोगे क्या? Will you issue the shares within? नहीं, you don't even have time to open a pen and paper at that point of time. Ideally, 29 lakhs ka figure, when does it get finalized? It gets finalized earliest by 1st April. सबसे जल्दी भी होगा तो 1st April. It won't happen on 31st of December. So, I am meeting the condition today, but the shares will be issued only in 1st of January. That's it. Nothing can happen on 31st December because I'm still earning the profit. I'm still earning the profit. आपको 29 lakhs का figure कब मिलेगा? साल खत्म होने के बाद, after the year is over. So this is going to be 0. This is going to be 0. And then you do the working. This comes to rupees. I'm just rushing with the calculations. 2.89 per share. 2.89 per share. Have you understood why it is not included? Have you understood why it is not included? Why 9 lakhs is not included? So you should be now familiar with this. Shares are included in veins from the date the conditions are fulfilled. So these 5,000, I have taken it from 1st of May. This 5,000 taken it from 1st of September. This condition is fulfilled on 31st December night. So the condition for issuance happens only on 1st of January. So therefore it is 0. It is 0. Okay. So Shailendra, hope you also understood. Yes. Soham, hope you understood. Let us move on to diluted EPS. Sorry, 20x1 diluted EPS. Diluted EPS. Earnings to same hai. 29 lakhs. What I told you, diluted is basic. This is 10 lakh 5,000 shares. देखो इसका total करोगे ना, this total comes to 10 lakh 5. Okay, this total comes to 10 lakh 5. Okay, so 29 lakhs divided by 10 lakh 5,000 shares plus. Now this is dilutive EPS. This is diluted EPS. Okay, see, as on 31st December, अभी जरा ध्यान से सुनो, retail contingency. Retail contingency. Do I have to estimate how many shops will I open in the future? I cannot. वो true and fair view कभी नहीं आएगा. So what the standard tells is, shares are included as potential equity shares only if the shares are issuable considering the current period to be end of the accounting period. In the current period, 1st January to 31st of December, these shares are actually becoming issuable. These are actually becoming issuable. Yes, they are becoming issuable because shops वाकई में खुले हैं. The 2 shops have actually opened. And since these 2 shops have actually opened, can I say that these 5,000 shares are potential for the period 1st of Jan to 30th of April? And can I say that these shares are potential for the period 1st of Jan to 31st August? Are, can I say this or not? Can I say this or not? Ye shares, these shares have been actually issued in the current period. Why? Because 2 sites were actually opened. So current period is the end of the accounting period, and since current period is the end of the accounting period, these 5,000 shares which were issued on 1st May and 1st September were actually potential right from the beginning of the year. And that is the meaning of the second point. Potential shares are included from date of contingent share agreement or beginning of the year. In this case, contingent shares agreement is not given to me. So I have to take it from beginning of the year only. So I have taken it from beginning of the year. And I will consider it as 5,000 into 4 by 12. And this is 5,000 into 8 by 12. This is the period when they are potential. Beta, this is when they are potential. The actual period is already there in this 5,000. This is when they are actual, which is this 5,000, 10 lakh plus 5,000. Okay. So this is when it is potential. And finally, now you tell me the 9 lakh shares, 9 lakh shares. Will they come here or will they not come here? Will they come here or will they not come here? 9 lakh shares, will it come from the beginning of the period or will it not come from the beginning of the period? What do you think? 9 lakh आएगा या नहीं आएगा? It will come. because now ये actual shares नहीं है, these are potential. This period is end of the accounting period. End of the accounting period, you have met the condition of profitability. You have 9 lakh profit in excess of 20 lakhs. And therefore, these shares are potentially going to be issued. They will be issued on 1st of Jan. That is why they are not considered in basic. But diluted में तो surely आएगा because they represent potential shares. They represent potential shares, and therefore 9 lakhs is going to come here because you've met the condition of 29 lakhs. Dekho, when are you going to actually calculate the diluted EPS? The earliest you will calculate is on 1st April. 1st of Jan. The earliest you will calculate is on 1st of Jan. 1st of Jan 20 कोई period दिया है क्या? Have they given year? Yes. 1st of Jan 20x2. On this date, you will definitely know what is the profit for 20x1. That means on this date, you will know whether you have to issue 9 lakhs or not. That means this 9 lakhs will remain in the diluted EPS calculation. It will remain in the diluted EPS calculation. And therefore, now when I proceed with the calculations, this comes to how much? This comes to rupees 1.52 per share. This comes to 1.52 per share. Okay. So that takes care of the years. That takes care of the years. Okay. And then let us do it quickly on a quarterly basis. I hope you just take a screenshot of this. Okay. The solution I'm explaining, you can obviously revisit and calculate it later on. Okay. This one, I'll just rub it. This I'll erase it. Okay. So all this kalakari nikal do. Okay. Okay. So that is done for the year. Now let us move to understand period means can we do it quarterly? Yes. Let us do it quickly quarterly in 4-5 minutes and conclude. Okay. Okay. See, I am given quarterly profits. Okay. So therefore, can I do this working on a quarterly basis? Yes. So let us do it on a quarterly basis. Quarterly profits. Quarterly profits. Q1, Q2, Q3, Q4. Profit is given to you. 11 lakhs. This is year 2 data. So first one is 11 lakhs. Second one is year to date 23. That means 23 minus 11. Okay. So 23 lakhs minus 11 lakhs. So Q2 profit is rupees 12 lakhs. Q2 profit is rupees 12 lakhs. Q3 is 19 lakhs. 19 lakhs minus 23 lakhs. You made a loss. बिल्कुल कर सकते हो. Why you cannot make a loss? हमने loss किया है. And finally, it is 29 lakhs. 29 minus 19 lakhs. So this is 10 lakhs. Okay. So now the profit figures are 11, 12, minus 4 and 10. And now we proceed to calculate the basic and diluted EPS. अभी जरा ध्यान से. Okay. Just pay attention. Don't sit to write. Understand. You can watch it later and do the writing. Okay. Q1. 11 lakhs. Divided by 10 lakh shares. Acha, did I meet the shop retail contingency in Q1? Pehla shop आया था 1st May. We are in Q1. Q1 is 1st Jan to 31st March. Did I meet the first retail contingency in this quarter? Answer is no. Did I meet the second retail condition? That is the second shop जो खुला है. Did I meet this condition? Answer is no. And did I meet the profit condition? Answer is no. So in all these cases, nothing is met. Your basic EPS is rupees 1.10 per share. 1.10 per share. Okay. This is fairly clear. Coming to diluted. Sir, my profit is 11 lakhs. उसमें तो कोई change नहीं है. Coming to diluted EPS. Okay. Now when I look at the diluted EPS, पहले basic से start करते हैं. 10 lakh shares plus. Consider the first quarter to be the end of the accounting period. So 31st March is end of the accounting period. Did I meet the retail contingency? The first shop? Answer is no. Did I meet the second retail contingency? Answer is no. Did I meet the third retail contingency? Answer is no. मैंने कुछ भी meet नहीं किया है. So in this case, basic equals diluted. Manini, you had asked this question. What are we going to do? We will report both of them. Basic equals diluted EPS. Okay. So that takes care of Q1. Fairly simple. Q2 की बात हम करेंगे अभी. Let us talk about Q2. Q2 के केस में the profit is 12 lakhs. The profit is 12 lakhs. Okay. 10 lakh shares. 10 lakh shares plus. Acha. The first shop was opened on 1st May. This is a quarter. Quarter में 3 महीना रहता है. April, May, June. So May and June, 2 months, the shop actually existed. Basic is based on past, based on facts, not on estimates. And it is based on actuals. It's not based on potential. So actually I had 5,000 shares for 2 months out of 3 months. So plus 5,000 into 2 by 3. 5,000 into 2 by 3. Is it okay? Yes. Did I meet the second retail? Sir, वो तो September में है ना? So you have not met that also. Did I meet the third retail condition? Answer is no. The third profit condition? Answer is no. So this is 12 lakhs divided by 10 lakh plus 5,000 into 2 by 3. So this gives you 12 lakhs divided by 10 lakh 3,333 shares. So this gives you rupees 1.2 per share. 1.2 per share. Okay. This gives you 1.2 per share. Okay. Now, profit कितना है? 12 lakhs. Profit कितना है? 12 lakhs. Okay. Third condition was met if we see it quarterly. Absolutely right. But when are you going to see the third condition actually being met? Only when you move to Q3. Soham, when you move to Q3. So Q3 में आप फिर से उसको reinstate नहीं कर सकते ना. It will come for dilutive. You can just pay attention to dilutive. Your query will be sorted out. Okay. We start with the basic 10,03,333 shares plus. Sir, 5,000 shares retail contingency came into existence on 1st of May. That means it was potential for the month of April. So 5,000 into 1 by 3. 5,000 into 1 by 3. The actual 2 by 3 is already considered in this 3,333 shares. So the remaining 1 by 3 is considered as potential. Okay. Plus, did I meet the second shop retail contingency? वो तो September में है. I have not met it. The third one, profit contingency. Did I meet the profit contingency? क्या था profit contingency? Earning more than 20 lakhs, you will get 1,000 shares for every 1,000 rupees earned. Sir, end of Q2, मैंने actually कितना कमाया? I have actually earned 23 lakhs. Because I have earned 23 lakhs, have I met the profit contingency? Yes, you have. What
the conditions say. Shares are included in current year as potential if the shares are issuable considering current period to be end of accounting period. Now Q2 is the current period. Treat it as end of the accounting period. And now you have Q1, Q2 together earning 23 lakhs. You have met the profit condition of more than 20 lakhs. So therefore, do the surplus 3 lakh shares represent potential shares for the purpose of diluted EPS? Answer is yes, they will. They will be considered as potential because I have met the condition of profits exceeding 20 lakhs. So therefore, the shares which will be issued to me are 3 lakhs potential. Actually issue nahi hoga because in the case of basic EPS, the actual day when you come to know that the share profit condition is met is in Q3. तब तक तो Q2 बीत गया. It is not issued. You will not consider. But dilutive के लिए you will consider 3 lakh right from the beginning of the accounting period or the date of the contingency agreement, whichever is later. Date of contingency agreement is not met, and therefore we will take it from beginning. So 3 lakhs into 3 by 3. So this comes to rupees 0.92 per share. 0.92 per share. Okay. Q1 and Q2 is done. I hope, Soham, I hope your query was clear. Yes. In diluted, we will consider. In basic, it will not come because of the same logic which we have used earlier. Okay. And then we move to Q3. Okay. Q3 ke case mein, there is a loss of 4 lakhs. There is a loss of 4 lakhs. No problem. Let there be a loss. Okay. Now, I have 10 lakh shares. I have 10 lakh shares plus 5,000 shares already were issued and they are in existence on 1st of May. So 5,000 into 3 by 3. Plus September में एक और शॉप खुल गया. So this quarter is July, August, September. So 5,000 shares will come for 1 month. 5,000 into 1 by 3. Plus, have you met the profit condition? No, it fell below 20. So this comes to 4 lakhs negative divided by 10 lakh 6,667 shares. So this comes to rupees 0.40 per share. 0.40 per share. So I hope this is done. You have understood. Let us now come to diluted EPS. Diluted EPS ke case mein bhi this is 4 lakhs. Now 10 lakh shares. 10 lakh shares plus 5,000 shares. Ye May wala hai. This is, wait. Why am I doing like this? Don't do like this, na. Let us start with the basic EPS figures. So 10 lakh 6,667 shares. 10 lakh 6,000 plus this 5,000 shares issued in September. The condition was met. So they are potential for the months of July and August. So therefore, 5,000 into 2 by 3. 5,000 into 2 by 3. Did you now meet the earnings condition? No, your profits fell below 20 lakhs. See, 11 plus 12 is 23 minus 4 is 19. You have not met the earnings condition. So this is 0.4 negative. I'm sorry. Yes. So plus nil. So now when you work this out, this also comes to rupees 0.40 per share. 0.40 per share. Q2 basic, why did we not take 3 lakh shares? She is asking Q2 basic, why did we not consider 3 lakh? Beta Q2 का profit जब determine होता है, when would it be determined? The earliest it would be determined is on 1st of July. 1st of July में हम profit determine करेंगे 12 lakhs. Where have I issued the shares in that case? The same logic that we have the same logic that we had in this case. Why did we not consider it here? Because the profit itself is getting determined on which date? The profit gets determined on 1st of Jan. Similarly, here the profit gets determined in Q3, first day. So therefore, have I issued the shares in Q2? Okay, no, you haven't. So therefore, not considered. Okay, all right. Acha, in this case, this is 0.40 negative. Acha. In this case, if you actually go to 3-4 decimals, you will see that diluted EPS is greater than basic. Up agar 2-3-4 decimals, if you actually see, diluted EPS is greater than basic, but don't forget there is a control number concept. I leave this for you for homework. There is a control number concept. If you read the question, it is saying there is a 4,50,000 loss from a discontinued operation. That means what? You find out the control number using profit from continued operations as 50,000. Overall, there is a 4 lakh loss. 4 lakhs loss, out of which 4.5 lakhs is due to a discontinued operations. That means 50,000 is a profit from continuing operations. So if you take this as the control number and get, you will notice that basic is higher and diluted is lower. So we continue with this reporting. Okay, so this I have left it for homework. मेरे पास time नहीं है. It's almost closing. Okay. Last one, we come to Q4. Rupees 10 lakhs is the profit divided by 10 lakh shares. Acha, 5,000 shares are there from the beginning of the period. 5,000 shares are there from the beginning of the period. And did I meet the profit contingency? Yes. But when will that be determined? On 1st of Jan. So will you include 9 lakh shares here? Answer is no. So this comes to rupees 10 lakhs divided by 10 lakh 10,000 shares. 10 lakh 10,000 shares. So this is equal to rupees 0.99 per share. And here I am having rupees 10 lakhs divided by 10 lakh 10,000 shares plus. Sir, did I meet the profit contingency here? Absolutely. This was 19. You have earned 10 lakhs. That means 29 lakhs. You have met the profit contingency. So the shares will be considered to be in existence from the beginning of the period. So that will be 9 lakhs into 3 by 3. 9 lakhs into 3 by 3. So that will be 10 lakhs divided by 19 lakhs 10,000. So isko aap solve karoge, this will come to 0.52 per share. This will come to 0.52 per share. Have you understood all the 4 quarters? Yes. सारे क्वार्टर समझा आपने को? All the 4? Yes. All the 4 quarters is clear? Any doubts? No doubts? Any doubts? No doubts? All done? Absolutely clear. Okay, so that takes care. Okay, Aniket, Nidhi Deshpande, who else is there? Saksham Lohia, Shailendra Singh, Hari, Sumit, Aniket Jain. Did you understand? All of you. Manini, did you follow? Yes, all clear. Okay, great. So that is done. See, one small thing is left, which I'm leaving for you for homework. That is calculation of EPS in a holding subsidiary relationship. Okay. I can I will be leaving this right now because I need you guys to get comfortable with holding subsidiaries, business combination, consolidation. So therefore, for the time being, I have left this question number 5. Okay, this is the only thing which is there for you that is pending. You can try it out, not an issue, but we will preferably do it when we will be doing consolidated financial statements and business combinations. Okay, so as of now, only this is pending, but because it is relating to group accounts, I would take it later on. Okay, so that concludes our Ind AS 33. Thank you guys, and stay safe. See you all. I don't know, the schedule is probably out or not, I don't know. But yeah, we'll be taking basic EPS is calculated at the year end. It means, Manini, that basic EPS is based on actual facts. Don't go into seeing potential. Shares are issued, take it in basic. Shares are not issued, don't consider. That is how basic works. Diluted works on shares hai kya is period mein, to consider karo. Whether it is issued or not, don't worry for diluted. If they are potential, consider them. If they are potential, we will consider them. Otherwise, we will not consider them. Okay. So potential ke case, diluted ke case mein, we look at whether those shares existed in that period. They may not have been issued, but basic ke case mein, the fundamental requirement is they should be issued. They should be issued. Only then you can consider it in basic. Okay. Basic is on facts. Diluted is on the extent of shares which are there. Okay. All right. So take care, everyone. And thank you. Have a good, stay safe and study well. Okay. See you on, what you say, 24th or 27th, 27th. Okay. Let us see 27th. All right. Okay then. Thank you, everyone. See you. Bye-bye.